Good turnaround Tuesday, everybody. Everyone had a good day. There was a nice little scalp in the Dixie when it rallied last night. I look at the platform here and my dashboard, and it's a work of art. You need to be a subscriber, so you have all of these different looks for intelligence gathering into your work for the remainder of the summer into the fall. So a lot of talk about Bretton Woods 2.0 on Twitter. If you're not familiar with Bretton Woods, look it up. So there's more and more talk about that happening down the road. Have a couple active patterns in play. Blake's still long gold, stop at 1209. And Stelio's still short USD NOK. But, you know, for example, in Euro right now, if I want to know what Greg is up to, this all I have to do is, you know, click the Elliott wave and get a chart, and looks like he's thinking that we most likely paused here and we're not going to get through the 1740 and we're going to break one more time. I know a lot of people looking for that count that would take the Dixie back to 97. So it's been really, you've had signals both way in the dollar, but this makes me hesitate to look for a breakout, because I have access to what Greg is doing besides when he's in here as a guest. Everyone with me? That's a freebie for you guys. Be careful on the long side of Euro. Okay, so let's take a look at a few things. I still think risk on. I talked about that I thought later in the week I'd have a chance to short, take a top pick shot in S&Ps above 2820. Looks like that's lining up. New high here will begin to diverge. I'm thinking 2830-ish, you know, kind of around Peter's number when he was here. NASDAQ had a blowout afternoon because of Google. I think Google's going to come in about 50 higher. So NASDAQ's another one that is interesting to me. You could see the weeklies still diverging. And I actually think there's a possibility, since this is the most puffed up, it probably has the most air for it to come out of. So actually looking to add to, I trade ETFs on this. So, you know, things like the triple ETF for the semiconductors and the NASDAQ. Getting back to currencies though, if that's the case and we're going to have risk on for a little bit longer, maybe through weekend or early next week, makes me think that this might be a decent little turnaround Tuesday candidate here, because the dollar already played out. I can't do it now. Yesterday I was talking about getting shorted between 80 and 95. Already took half off here. Uh-oh, my AOL settings are out of date. Well, I'm out of date. But taking a look at the yen, if we're going to continue to get risk on, and I'm not saying this is bullish, here, I'll teach you guys something here. Since Blake is in here, I'll do a little mentoring. What kind of low is this? Guys have been following me for 5-10 years. Anyone know how I define a low like that? Come on, I know there's someone out there. What kind of low is that in USD yen? New low in price, new low in RSI. The real simple implicator. Okay, it's a confirmed low. So markets rarely top on, there you go, Bob, you're a little late on the trigger. It's confirmed. Markets rarely put in a significant low when momentum indicators are confirming the price action, vice versa on highs when you're making new highs, and your momentum indicator, I don't care what you use, I just choose to use RSI because, you know, it's what I've been using. It's hard to teach an old dog new tricks, so this old dog likes the 14 RSI. So, you know, so potentially, even if we get a rally back to, this was 75 pips here, so, you know, maybe you scalp it, you have an entry here, you have a tight risk, you don't want to hold it into new low ground, and maybe you get something like this, from here, and all that would be is maybe a 50% retracement of the big decline from last week. Give some of the yen bulls hope. Yields were up dramatically. I know it's disconnected. We talked about how the yen moved out of its parents' house and got its own apartment because of the correlation isn't relating to much nowadays. But the yields really spiked. And, you know, this is something Steve showed, that rising wedge and the yield in the 10-year and everything, and it looked bearish. And this was a few weeks ago, and it's really, you know, it's starting to manifest in a decent way. Look at the yields up here. All right, this was yesterday. So, and they're saying a lot of it has to do with, you know, what Japan's done. So we don't even necessarily have to go to new highs, although this was a confirmed high. But we could just, you know, maybe clean out levels here, maybe go to 305 or so, and then fail again. But if they continue to push up, it's hard for me to see USD, Japanese yen collapsing. You know, I'm not saying that the turnaround Tuesday trade, they can't go down and pick off that low and turn, but you have to have some discipline when you're scalping, day trading. And I'm not sure what the format's going to be. I'd probably, oh, the gold's looking okay, you know, held where it had to on this pullback. You know, it's only a bear market rally too. You know, maybe we get ABC here too. Silver's looking much better. It's got, I mean, you look at the percent, almost up 1%. So silver, 1580 was an important level. I really don't, you know, I'm not a major bull here, but, you know, why can't we get back to, you know, 1580, maybe 1630? I still think before it's over, we're going to see 1450 or lower in silver. And why can't we see 1270 in the gold again? You know, that's only 38% back of this. And then the big gold bears are looking for sharply lower. This is about $160 move from 1270, 1280, gets you down to 1110, 1120, which are the lows here near the end of 2016. Okay, but for now, I think there will be a decent pop in gold and silver to cover long positions and look for shorts. Any questions for me before I hand it off to Mr. Confirmation? We have a very good interview today, at least from the reaction I'm getting on Twitter. Jake's going to be here from @Forex Cobain. You guys know him? I've seen his tweets. It's kind of like the Lenny Bruce of Forex trading, you know. He uses any kind of language that just pops into his head. So I'd advise that you get the children out of the room during the interview. Okay, it might be an R interview. Who knows? Maybe an X. So it's an adult-only interview on FX today. Does that excite you, Steve?
Oh yeah, absolutely.
Yeah. Okay. It's going to be colorful.
I have full trust in your selections. So, you know, if you say so, I have to go with
it. So how you doing on Turnaround Tuesday? Are you spinning around like a top? Turning around?
Fantastically. We've been having a very nice time here. People burning alive, etc.
Oh, I heard fires. Yeah, Greece is kind of like California. The whole state's on fire here all the time too. We had a lot of drought. In Greece for many years.
That was actually organized crime. I mean, it was.
Oh, okay.
Yeah, 100%. Because yesterday.
Collect the insurance. Yeah.
No, I don't think this is the case actually.
Oh,
I don't think this
why would organized crime start a fire?
What they do, they pick nice areas which are forested and they burn down the trees and they build on them. That's the thing. You're not supposed to build on areas which used to be forested burned down for like 30 years, but you know how it happens. You know, a few backhanders here and there, and 2 years later, there's new buildings. So that's really really sad what they're doing. But anyway, anyway, yeah.
Well.
So, okay, actually, Steve, before you start, can I mention a couple of things?
Oh, no? be my guest. Be my guest. We have a lot of time to fill in today, as you know.
That's fine.
Blake is currently boarding a plane.
Okay. Yeah, and I've done my 10 minutes.
Okay.
I hope you're not too tired, Coach.
I'm exhausted. I'm gonna go take a nap before the interview.
Okay. See you then.
My orders are in, man. You know what? Staring at the screen, is that going to affect anything?
Okay. So,
right, so what's up, Stel?
A couple of things, just in case people have missed them. One was quite major, but I'll start with the other one. We had the new British Foreign Secretary, Mr. Hunt, who went to Berlin on his first visit there, and saw, you know, his German counterparts and everything. And there was a couple of quite interesting quotes. He said that without a real change in approach from EU negotiators, we now face the real risk of a no deal by accident. So, you know.
Oh yeah, I saw that. It was on the news. Yeah.
Yeah. So he's putting on some pressure here, which makes sense. You know, there's been pressure from both sides for months and months now. But now, you know, he visited Germany, said that. And the interesting thing was one of the things that his counterpart, I'm not going to pronounce his name, said that, again, and I quote, he said, "We don't want a disorderly Brexit, we want an agreement." So, no, so basically all this is quite, you know, it's not destructive, let's put it that way. It's I would treat it as being constructive. There's going to be pressure from both sides, as there has been.
Is there a drop dead date on it or anything?
Is there what, sorry?
A drop dead date or a, you know,
well, Brexit is happening. Yeah, Brexit is happening in March 19, if I'm not mistaken, 20-something of March 19. So we don't have that much time left. That's the thing. So
8
something
months.
has to start happening quite soon. And
8 months.
And you know how this thing is with all negotiations. I'm sure there's a lot of toing and froing, and you know, arguments here, arguments there, interests. Basically, that's what is driven by each country's, you know, the UK and the EU's interests. But I've said this many times. I still believe it. Eventually, there's going to be an agreement. Maybe not a great agreement, but there's going to be some kind of framework that they can work upon, and which is going to be kind of acceptable from both sides. That's my impression, simply because, and again, I've said this many times, but for people who haven't heard it before, you know, the UK is joint second biggest economy in Europe with France. So this is going to be a big hole that's going to be left if there's no agreement, and it's in the interest of both sides to have something in place. I mean, it just makes sense. So I still think that this is going to happen. That's the reason why long term I'm still bullish the pound. And but again, as our friend Amanda said very correctly in the chat room, nowadays the markets, after all these months, they're a bit more, they don't care that much about little headlines like this. You know, the moves you see are quite small. The big ones,
because they got tired of moving on every little thing, because now it's more than obvious that, you know, we're going to get a lot of false starts and false hopes, and some statements that are actually optimistic, some statements then that are pessimistic. Don't forget that also this is part of a diplomatic game in a sense. I mean, you know, try to be more strict with your assessments, to try to in essence push the other side to be more agreeable. So we're going to have tons of back and forths until we get an agreement. But I do agree with you, Stelio. I mean, it's in the best interest of both parties to find a commonly accepted agreement. And, you know, it is more or less, in this case, very often things work a little bit like gravity. I mean, inevitably, you know, they're going to be, you know, they're going to be pulled towards a solution. That's what I think as well.
Oh, no, guys, keep in mind, I know it makes sense, but keep in mind we're currently living through an era of no sense.
Yeah.
and nonsense. You know, so
Yeah, that's
yeah,
very
you
true.
know, everything can happen. I mean, does a trade war make sense? Only to Donald Trump.
Yeah, and to
You
speak
know,
about that, he was just tweeting about it like
yeah,
half an
how
hour ago.
great it is. You know, it's binary.
Yeah,
They
yeah,
either
yeah. How great it
binary.
is. And let me I've commented before on that. Let me comment on that again. Trump is right that trade deficits are a problem. The problem here being that, first of all, tariffs will end up damaging the weaker, the lower classes of the U.S. Citizens more than anybody else, because
Disposable income, basically, yeah.
because the trade surpluses, for example, that China has, and the trade deficits that the US runs, is not the problem. It's the symptom of the problem, right? I mean, it's like, for example, having a very serious disease, let's say having cancer in the head, and saying, oh my God, I have headaches. I have to do something for the headaches. What am I going to do? I'm going to take an aspirin. Yeah, okay, the headache is going to temporarily go away, or it might get a little bit better, but you've done absolutely nothing, right?
Yeah.
That was my cure.
So bottom line, the problem is that the US does not manufacture the things that US citizens want to consume. So how exactly are you going to obtain those? And needless to say that trade deficits as budget deficits are a huge problem for an economy and inevitably will lead to very bad days. There's no question about it. But in the short term, running trade deficits is the way for the Americans to sustain a standard of living which is above their means, right? Because, for example, the Chinese are producing so many products, they're sending them to the US in exchange for what? Trade surpluses denominated in treasury notes and IOUs, right? So in essence, they're actually producing goods, and in exchange, they're getting IOUs, which nobody knows if they're going to be paid in full. And when I say paid in full, I'm not implying that the US is going to do a haircut in the debt. Although I remind you that candidate Trump had hinted for that as well, right? And he had to take it back afterwards because they explained to him obviously that just by implying something like that, you're damaging the economy, in an irreparable way, right? Because if people lose faith in U.S. bonds, that means that interest rates are going to go up, which means that suddenly you need a lot more money to just service your debt. So
maybe the last couple days on bonds is kind of a symptomatic, that wedge, and maybe we're starting to see it happen. We're going
to show all the charts. I mean, we have more time.
It's not a theory. It's like manifesting.
Yeah, it's too early to say because still the prices. I mean, the prices, the interest rates.
You want confirmation at a 5% 10-year yield.
Still, interest rates are ridiculously low if you think about it. Not only for the US in general, because these are markets that are completely distorted by central bank activity, right? The issue is that many people don't realize that by distorting, for example, the prices of bonds, and obviously as a result, the interest rates, you don't do just good to the economy. You actually do bad to the economy because artificially low, for example, interest rates, first of all, they create a moral hazard. In essence, they influence citizens' decisions in taking more debt instead of
like we're going to have new lows in TLT if you look at my screen here.
Yeah, and
they're pretty directional. Yeah,
I see it. And they're penalizing savings. But savings, I mean, many people don't realize, but savings is the cornerstone of an economy, right? Where does capital investment and capital creation begin from, right? From savings. So in essence, what we're seeing is a very distorted economy, and I think that sooner or later, the repercussions of that are going to hit every single economy. Anyhow, having to do with that, we definitely.
Where's your bunker, man? Where do I find your bunker?
Nah, I'm not.
No bunker. You guys don't have one built there?
No,
Fireproof. It's got to be fireproof.
To be honest, yes, that would be a good idea, given of what's happened yesterday.
I'm gonna let you guys talk. I'm through interrupting for a while.
One more thing before we go into charts and stuff. First of all, our friend Fede is asking. He says, "I found this webinar because of Cobain. Is there a chat room I'm not finding?" No, we're going to do analysis for first hour, so another 30-40 minutes from now, and then Cobain is going to be our guest. He's going to be interviewed by Dale. The other thing I wanted to say, sorry,
we do have a chat room for our subscribers, obviously, right? ForexAnalytix does have a chat room as well. Actually, I've also promised that I'm going to show some of the elements of the new chat room that is going to replace the old chat room to our chat room members. I told them that I'm going to show them a few elements because they would like to see it, and I'm going to do it in a little while. Go ahead, Stelio. What did you want to say?
Yes, I was going to say the other thing that happened today. Okay, it's not a currency that we cover, but it's always nice to look at what's happening in the world. We had the Central Bank of Turkey was expected to hike 100 basis points a day, and they did nothing. So USD Turkish lira went from 475 to like 5 or something like that. So it was a big jump, and just something to think about is that, as my friend Steve has been saying correctly for weeks now, the things that are happening in Turkey, there's nothing about them to make you feel confident about the lira. It's like, Erdogan, the president, he's getting more and more power. He's appointing people.
You mean the president and central banker, right?
Central banker,
I remind you, the previous time they had a currency crisis, I mean, the Turkish lira, exactly 10 years ago, in the summer of 2008, was trading at an exchange rate of 1.15 to the dollar. You needed just 1.15 Turkish liras to buy a dollar, and it's currently almost at 5, right? I mean, the last time, though, they had like a parabolic depreciation of the Turkish lira, so we had a parabolic appreciation of the USD TRY. I remind you that, of course, the Central Bank of Turkey wanted, of course, to hike rates aggressively, and Erdogan, for whatever reason I can think of, was of the idea that it's treasonous to hike interest rates because you're slowing down the economic activity, which makes no sense because, in essence, you will slow down the nominal activity, but in real terms, because obviously a depreciating currency also brings inflation with it, right? Yeah. So, but in real terms, you need to keep the currency in check. Otherwise, you bring a lot of bad to the economy. For example, who is going to invest in assets in the local currency when they know that a huge danger is that they're going to be losing the vast majority of their money in just in the depreciation or from the depreciation of the currency itself, right? So it's very important, for example, to attract foreign investment. It's very important for the investor to know that there is some kind of a stability to the local currency. So a central bank has every reason to want to keep the currency in check, but Erdogan was actually forbidding them to do so. And I remember that they had to have back then a meeting, actually an unplanned meeting, to see what they're going to do about the currency depreciation. And Erdogan decided to attend the meeting and, in essence, be the head of the meeting of the central bank, which is supposedly independent, supposedly, yeah. And they ended up back then, I don't remember the exact numbers, I actually was trading the TRY back then, they ended up hiking, but hiking a lot less than the market expected once again. So obviously that wasn't enough to stall, but only very temporarily, the depreciation of the Turkish lira. And we're seeing the equivalent happening here. Obviously, Erdogan decided that he doesn't want rates to be going up, so they hiked by what was expected, Stelio? I don't even remember what was expected.
For today.
Yeah.
100 was expected.
100. And they did nothing. Yeah.
They did nothing.
Yeah, and to be honest, even if they hiked 100, I still don't believe that the Turkish lira would strengthen. Perhaps it would for a couple of days or whatever.
The half-life of such interventions is becoming smaller and smaller, probably a few hours.
Smaller.
You know?
Indeed,
but yeah,
indeed.
I mean, my opinion is, and I think Steve agrees, is that when you see things like that happening in a country where, you know, the president or prime minister, whoever the leader is, starts taking control of everything, you are heading to very dangerous territories. You know, I can think of Chavez and Maduro and stuff like that. So I hope they don't become another Venezuela. But man, it really doesn't look good. So
yeah, it doesn't.
Erdogan hired his gardener to be Secretary of Agriculture.
Hey, you know something? It wouldn't surprise me.
He's got his whole family in there.
Yeah.
Nepotism government.
It wouldn't surprise me, to be very honest.
So how's that going to affect Europe and NATO? That's going to be complicated, isn't it? If Turkey goes away of Venezuela with all those weapons and being a member of NATO.
Turkey is definitely at a very, very critical geopolitical area, definitely.
Yeah.
And it is a local superpower having to do with military strength. There is also no question about it.
Right.
So I think that the more they get in trouble having to do with their economy, the higher the chance that they will end up destabilizing the area in other means or ways as well. You understand what I mean? Especially when you are more or less a dictator like Erdogan is, and the economy is doing very lousy, it's also a very nice form of distraction.
Right?
Distraction, yes, exactly.
Well, I mean, there's destabilization all over. I mean, Syria next door, everything. So
Syria just at the south border. Yeah.
I'm personally a bit scared because, you know, we're in Greece, we're right next door. There's always been incidents with islands and stuff like that. So, you know, I just hope that nothing happens because of all these things happening now in Turkey. But anyway, let's hope that things get stabilized somehow.
Yeah, indeed. Let's see. We're going to find out soon. So
short the world.
Yeah, let's go back to the chat because we have quite a few things to talk about. I think that, you know, first of all, during the next few days that Blake is not going to be with us, he might actually pop up tomorrow and the day after tomorrow, but, you know, he's not going to be standard half an hour. I think we can spend a little bit more time discussing developments on a political and geopolitical level for the first few minutes as we did today, and then we can be looking into chat. But some of the days we're also going to have Greg and Andre joining us. For example, I know that Greg is going to be with us on Friday. So, you know, I'm going to cover the first half an hour and he's going to cover the second. I think Andre is going to be with us one of these days as well. So I'm pretty sure that we have a lot of things to talk about and see. And
I heard Amanda might join us one day.
Oh, I'm really hoping so, because Amanda definitely has a lot of interesting things to talk about. I mean, for those that are in the chat room, they know that she's very talkative in there, and she's a very experienced trader and
lovely voice too.
Indeed.
Knock it off, guys.
And as always, you know, a very nice British accent, which is always nice to hear. Let's begin by stocks. Yesterday I was saying that you said it as well yesterday, Coach, that the S&P had held the 2790 area, which is like the closest soft support area that we have, and you know it's pushing to new highs from there. So you know I'm still cautious.
Go up 50.
Yeah, I'm still cautious having to do with the upside, but as I've said, you have to keep looking higher until proved otherwise, right? Because it's clearly in an uptrend. Speaking about that, by the way, we got Google, Alphabet actually, but everybody knows it as Google, beating expectations yesterday. So Nasdaq is threatening actually of breaking above this confluence of resistances that we had at 20. Yeah, which opens this confluence of resistances just below 7,600, also very close to this ascending wedges resistance. And we do have more earning reports for the Nasdaq this week, right, Stelio? Actually, I just realized.
I think so, yes. I have to check.
I just realized that I'm not showing my screen. Okay, now I am. Okay. So you can see my screen here. So we're breaking through this resistance in Nasdaq. We have a nice confluence of resistances below 7,600. That's almost where this ascending wedges resistance is at as well. So I would be looking for that level and see what kind of a reaction we get from there. This is the S&P. This is the 2,790 area of support. It held. It's pushing higher. So we have to remain cautiously bullish. It's as simple as that. I mean, we've broken above there. Perhaps this is some type of an ascending wedge as well, depending on how you draw it. But it's too early to say. I think that the Nasdaq, from a technical perspective, is a lot more clear. So these days I'm actually keeping the Nasdaq on my charts. This is the USD Turkish lira that we're talking about. Just I wanted to show the charts because I wasn't sharing. In essence, we had a break above this triangle, this symmetrical triangle. We came down, we retested it, and we're pushing higher once again. So this is the picture. So let's have a look at some of the major tickers first before we talk about some other stuff. Stelio, I know we have more earnings for Nasdaq this week. Which companies do we expect to report earnings this week?
Facebook.
I actually don't remember. I have to check it.
Facebook is one.
Okay.
Check it.
Speaking of Facebook, Coach, just look at how interesting this is, right? Just look at this. Facebook testing
Maybe
this.
Get a throw over.
Yeah, perhaps trend line resistance once again. Yeah. Momentum seems to have slowed down. We have some clear RSI divergence here as well. Yeah. So I would be quite cautious here. And if you see some of the other FANG stocks as well, I mean, the one that has definitely broken down is Netflix.
Yeah.
Yeah, here it is. I mean,
maybe it tries
we
again.
had.
Yeah, really.
Yeah, I mean, this was a perfect retest of this broken triangle, and it's dripping lower once again. So Netflix definitely looks like some technical damage has been done here. I think that pullback was a great opportunity to be selling it. I wrote it also in the chat room that 380 to 395 within this area. I was definitely looking for another leg lower to begin. At the worst case scenario, filling the gap before going lower. So this was a perfect reaction from there.
It's still an island. It's got all those people. Yeah.
It has all those people trapped. Yeah, you're absolutely right about that, Coach. Now, having to do with the major currencies. Euro USD got rejected once again yesterday from this resistance line. So keep in mind that there is absolutely no way that the eye can turn bullish as long as we remain below it. But even if we break above this, 118.50 is going to be quite important resistance. We had a conversation in the chat room about that yesterday, saying that personally I wouldn't be buying a breakout from this trend line, and the only reason being is that I think that 118.50 has also the potential of rejecting price action. But if 118.50 actually breaks to the upside, I think that we're going to be heading towards 121. So I would feel much more comfortable in buying a breakup from 118 for a move towards 121 than buying a move from here, having to worry about 118.50 actually providing resistance. More or less the same deal here with the cable. In my opinion, unless the cable breaks above 133, anything below 133 is just noise, and it's just some bearish consolidation. Obviously, the downside momentum has obviously stalled. There is no question about it. But I need a lot more than that to commit to being long a currency pair that has been beaten down as much as the cable has recently been. Now, I got involved with copper. I wrote it in the chat room before. I got triggered at 277. I got triggered long. I was monitoring this descending wedge. I think that a move towards this peak here at 288 but ideal, in my opinion, to retest these broken ranges, support and resistance at 294 looks likely. So what I'm looking for is something like this. Okay, so I'm trying to trade this. Obviously, I don't want to see a move below here, right? Below the lows. So, I have a very clearly defined reward to risk ratio here. So this is what I'm looking for. Now, having to do my other position is being short USD CAD. I still feel good about it. I still think that there will be one more leg to the downside towards the 130 area at the very least. That's where I'm going to be looking to offload my short position. Anything between the highs and there is noise, in my opinion. This was a very powerful candlestick that we got on Friday, and I do think that it's indicative that my idea that this was a B in an ABC is quite a high possibility. Now, having to do with the Aussie and the Kiwi, I think nothing much has changed here. They both seem to be consolidating in triangles. So unless we get a break above 0.6870 in the Kiwi or a break above 75 cents in the Aussie, I really don't think there is much to do. I mean, either you're short and you're holding, or you are hoping for a rebound towards these levels to look for the potential of seeing more downside, because they would need to do a lot more to prove that something has dramatically changed and we should be looking higher instead of lower. Now, another thing I wanted to show, and it's obviously very important for the market, is what the USD yen has been doing, because the USD yen is flirting. It pulled back yesterday. It closed more or less right on this confluence of supports at 111.50. But it's more than obvious that if we do finally push below it and we close below that level, we might be seeing like a deeper pullback, right? So I was monitoring yesterday's close. Yesterday's close did not confirm a breakdown from that level. Today might do so, or tomorrow, or whatever. If that happens, I'm going to be looking lower. I'm going to be looking lower, probably towards like 109, right? 108.50. Still, I'm not willing to trade this because I think that USD yen has been completely decoupled from the vast majority of the things that traditionally keep moving it. I mean, just to give you an idea, USD yen was very highly correlated with risk, as you know. We've recently seen it trade inversely to risk. So we have risk on at the same time USD yen is going down. We had risk off and it was climbing. At the same time, it was very highly correlated with, for example, US rates. So theoretically speaking, as you see, we've been having a move higher. This is the 10-year yield. Okay, I repeat, this is the 10-year yield. So this move higher that we're seeing in the yield traditionally should be offering a very nice bid to USD yen, right? Because USD yen has always been very sensitive to the US yields. So instead of seeing the move higher in yields, pushing the USD yen higher, it's actually moving inversely to it. So bottom line, I don't want to be involved with it. I mean, it's acting in a very weird way, in my opinion, in a very manipulated way, any way you slice it. So I'd rather trade something else that I feel I have more conviction in what it's doing and what it wants to do. And then I'm just monitoring this until I feel more comfortable in trading it again. Now, I already showed what the yields are doing. Coach showed the TLT and he said that he thinks it's breaking down. Let me show the 10-year Treasury, the ZM actually here, which are the futures like of the 10-year. Let me show you what it's likely doing. We had this flat top triangle, and I said that, listen, there's the bull scenario that we break above this horizontal trend line resistance, in which case we can see another move higher, likely to test that resistance up there, almost at 122 and 122.40 roughly. But on the other hand, alternatively, we're seeing a breakdown from here, a breakdown from the 50 DMA, this horizontal support area, also this ascending trend line triangle support. So, this looks quite a bearish development, and it looks like the treasuries might just push the new lows from here. So, I'm actually quite bearish from what I'm seeing here. Combine that with the move we had in the Bund, and unfortunately, I forgot to show it yesterday because it was one of the things in the beginning of the day I wanted to show yesterday. Why? Because we also had a flat top triangle here. We actually pushed higher temporarily, so like a last hoorah to the upside, and then we had a very, very big reversal candle on Friday, an outside black candle, a key reversal actually. This was a key reversal. And yesterday's price action, so I wanted to show it yesterday and say that be careful here, because if we actually break below, people that read my analysis during the week, they have read that, be careful, because if we actually break below here, we might be moving lower once again. And if you look at the big picture, let me also show you the weekly chart, because it's important to also keep in mind what the hell is happening here on the weekly. And here is what's happening. So here's the weekly chart. So not only we got rejected, but look at where we got rejected from, right? Very big prolonged uptrend, leading to a momentum loss and a consolidation within a triangle. But as it seems, this triangle is not ready to break to the upside yet. So getting rejected from this triangle, once again, opens the door for a decent move to the downside. And, what you've seen here, we drew that like several days ago. And this is exactly what's happening. We almost made it to the trend line resistance. We got rejected from there. We're pushing lower once again. So I do think that there is a nice potential within this triangle for the Bund to also push lower. So I do think that both the treasuries and the Bunds look like they want to depreciate somewhat from here. And I think the reward to risk ratio is still decently appealing. Okay, so for example, any pullback, any little pullback, I think would be quite a good trading opportunity. Having said that, let me, I owe that to the people in the chat room. I wanted to show them very, very briefly before we continue with more chats and I go through your questions. I want to show them the new chat room. I already explained to them that the design is not ready. So, the chat that you've seen here, I mean, the design of the chat bubbles, etc., is going to change. But the bottom line here is, first of all, they wanted to ask about emojis. As you see, we have tons of them. Okay, because, it was one of their complaints. Other than that, I want to tell you that you have functions that we didn't have in the previous one, which is that you can search people by name, so you can see what everyone is writing. You can also, there is a list, so you can see directly things that have been attached. So let's say you're looking for a chart that somebody has posted or whatever, there is a separate list to do so. You can also search here by content of messages. You can also mention people or reply directly to whatever somebody wrote, or even favorite something, so you can search through it afterwards. So and most importantly, the new chat room is also a lot more friendly with mobile devices, so it's not going to be expiring your session every now and so you will be you will need to log in back again. It's also going to show in the exact same way on your mobile devices, so it's going to be a lot more user friendly. So I had promised to show you to give you a little idea of how the new chat room will be. As I said, the design is not ready yet, but we're getting there. So let me see what kind of questions we have. Can you discuss the relations of treasuries versus precious metals? Yes, absolutely. Listen, precious metals depends, first of all, depends on the precious metal. For example, copper is a totally different story than gold is. So, for example, Coach, I know you're here because I can hear you breathing. Say
I'm breathing. Huh?
Yeah, say your nice line that you have about copper is all about construction, and gold is all about destruction, right? That's what you've been saying.
Debt destruction.
Yeah, exactly. So bottom line, the bottom line, copper is something that is usually highly correlated with growth. On the other hand, as you very well know, gold has been a hedge in many occasions. Lately, it hasn't been acting as such, but it's definitely a run to safety instrument when something threatens seriously, for example, the financial system. And traditionally, weirdly, it's not doing that thing during the past several weeks, but traditionally, since the cost of holding gold is losing whatever interest something else would pay you, alternative, let's say, treasuries, usually there is an inverse correlation, and traditionally, between real yields and those kind of precious metals like silver and gold. So usually when you have real rates going down, the price of gold is going up, because the cost of holding gold, which doesn't give you some kind of a coupon, doesn't pay you some kind of an interest, is less than it would be alternatively, right? So and let me reiterate here, it's all about the real rates, not the nominal rates. So for example, it doesn't matter if, let's say, the yield is going to go up from 2.5% to 3%, because if at the same time inflation is moving higher at a bigger rate, real rates are going down instead of going up. So don't confuse nominal rates with real rates, right? So I'm telling you that there is a traditional inverse relationship with real rates.
Steve, my wife and I have copper wedding bands.
I doubt that very much.
Yeah, because we wanted to construct a great marriage, and I thought gold would, not be a, good precedent for our marriage, because it's the metal of destruction. Plus, it's good for arthritis too.
Actually,
people that have arthritis wear copper all over.
Actually, I'm somewhere in between. My wife and I have
palladium,
pink gold.
Pink.
Yeah,
Wow.
pink gold. You've seen pink gold.
Yeah.
And they make it like, yeah.
I know how you like to feel pretty, Steve.
Yeah, I do. It's bringing on surface my gay nature, right? You're telling me something like that, but yeah. Okay. So let's have a look. Oh, palladium on the other hand, which, by the way, palladium is rebounding quite strongly here. You can see it. Palladium on the other hand is
more of an industrial, kind of the most industrial precious metal.
Exactly. So palladium is also decently highly correlated with the economy and how growth is doing, etc. Of course, every metal has its own unique characteristics of demand supply as well. So you always have to take that into account.
Are they use that for catalytic converters? Because they used to use
yes.
platinum. Okay.
Yes, that is correct.
So,
that is correct.
So the auto sector is a major deal for palladium.
For sure. By the way, I see some people in the chat room, they were talking about it before, that are looking into buying silver. I have to say that I'm looking this likely descending wedge in silver. But regardless, as you see, silver has been consolidating here. So, I think that if it wants to break higher from here, it has to do imminently, because if it keeps spending more time consolidating near the lows, we all know how that's going to end. Right?
I'm going to teach you the cursor method right now. Go back to silver where it was.
Yeah.
Okay, and put your cursor over today's candle right there, and now drag it up. Go up, silver. Go up. That's the cursor method. I use it. It works sometimes. Huh?
Should they keep the left mouse button clicked while dragging it, or it works without?
If it doesn't work, you try a magnet. I've also tried magnets.
Okay.
All right, I'm through being a comedian. Go ahead, buddy. But I'm pushing it up here so I could get out at 1580.
Personally, I don't like silver yet at all. Even if it breaks out from here, oppositely from copper, that copper has some more room to the upside to rebound even within a bearish move. So I felt okay buying it. But having to do with silver, having this 1575 area just above, I'm a lot skeptical buying this breakout, because we're going to be banging our head to resistance almost immediately after that. So personally, I'm very, very cautious with silver. Same is here with gold. I mean, gold is also consolidating here near this descending channels bottom. If it breaks higher, I would be looking for this confluence of resistances here. One of them is this long-term support trend line that might act as resistance. The other one is the descending channel resistance. Come on, tell me what you thought. I want to hear the joke. I heard you laughing. Tell me what happened.
I just wrote to him that I love the cursor method. I'm going to be using it from now on.
Okay, so let's have a look at oil as well. I have to say that the same thing I said before with oil, with gold and silver. I see the same thing here with oil. I mean, I see crude making several attempts in rebounding, and all of them have failed. Bottom line, I do think that the chances for another leg lower for crude are significantly high. Okay, so many attempts in what has been a bull trend since the beginning of 2016. So many failed attempts during the past few days. I think this smells bad. So I do think that the move lower in crude probably is not done yet. So I would be expecting more weakness in the coming days. Okay, just getting that out of there. I wouldn't be selling it here. I mean, I sold it when it was the time, and that went well. But I wouldn't be selling it here. And the reason I wouldn't be selling it here is because, or I would, but with a very cautious, if I was trading shorter term, with a very cautious stop, because $66 is a confluence of three supports. So $66 is an area that has the potential of creating a reaction. So keep in mind that if you're looking to do something with crude that involves you being short, keep in mind that I wouldn't be betting my money that it would be easy to penetrate through 66. So if you can squeeze a comfortable for you reward to risk ratio with a target of 66, fine. If not, I would be staying away from it. Just my personal point of view. Okay. So something that we forgot to mention, which is very important because the market has been moving due to it for several weeks now, and this is the USD CNH. Okay, USD CNH intraday, we saw a new high today, but once again we've slipped below the 78.6 from the move that we got from the highs to the lows at 625 roughly. There is a clear momentum loss, so I think we were expecting some kind of a pullback here. That was actually perfect. It went exactly what we were expecting. And I'm seeing the same elements here again. I do think that there is a good chance that we're going to see a pullback to at least work out the oversold conditions towards this previous area of resistance that can act as support now. It had acted as support previously as resistance as well, towards this 670 to 672 area. So I wouldn't be surprised if we saw a pullback from here. We are seeing some RSI divergence as well, but it's diverging above the area of 70. So it's less important in my opinion. So I wouldn't be surprised if I saw some type of a pullback, but definitely we don't yet see the elements of some kind of a big reversal, right? So I keep monitoring it, and I'm going to tell you if I see something more to it than we already have. So far, as I said, just some momentum loss. And we have a friend asking about the USD ZAR as well, which I haven't covered. Listen, it looks to me like the USD ZAR is consolidating within a pennant. This move lower definitely doesn't look impulsive. So I would expect the USD ZAR to break to the upside and push higher once again. I mean, price action tells me so. It found support where it was supposed to find support. The price action is overlapping. It's slow. So I think that you should respect the potential for more upside here. USD ruble, by the way, since we're in exotics, still within a perfectly symmetrical triangle. Eventually, this has a decent chance of breaking to the upside because the previous move was to the upside. But we're currently in the middle of this triangle, so not much to do here. USD Singaporean dollar has broken higher from this descending channel, currently testing resistance, probably within a triangle here as well. So this might end up breaking the upside as well, right? You want to see it like something like this. I don't know how you want to look at it, but any way you look at it, for the time being, it looks like it has a decent chance of breaking the upside rather than plunging lower. We do have to note some very clear RSI divergence here though as well, but perhaps we are trying to work out the overbought conditions just by consolidating a little bit longer in the current range. Another pair I wanted to show once again is the USD Swiss. Now that I remembered to mention it, and here it is, still holding within this flat top triangle. Watch out here, a break above 1005 would definitely lead to more upside. I do think that respecting the upside potential is the way to go until proven otherwise. And since we mentioned it again yesterday, Euro pound is moving lower, but in a manner that's definitely not impulsive for the time being, coming down towards the 89 area, 88.70 to 89 cent area. Be careful here, because if we find support, that might be a breakout, a retest, and then we might get some acceleration to the upside. So I'm still closely monitoring this. I might get involved with it if I get comfortable enough that this is just a pullback to retest the broken channel. I think there is a good potential to see a lot more upside from there. Let me see if we got any more questions that I have not covered. Steve Silver up with SPX up risk on market. Is this sign of 300 line strength coming in the silver? As I said, Dan, I hope I'm reading your name correctly. I think that having to do with silver, we have to be a lot more cautious than this. Unless silver breaks above the 1575 area again, I wouldn't trust the upside, right? I mean, so silver has a lot of hurdles to overcome before we can actually feel comfortable about the upside again. Until then, I think that, trying to buy it, it's okay as long as you know what you're doing, as long as you have a tight risk, and you are adjusting your leverage accordingly, taking into account that means that you're trading counter trend until proven otherwise, right? Because don't forget that silver, if we go to the weekly chart, and this is very important, it's always important to keep the big picture in mind. Silver has broken down from a long-term triangle, right? And as you see even on the weekly chart, I mean, it still is very heavy. It has also broken down from this horizontal support area, which comes, as I told you, roughly at 1570, 1575. So unless we clear this area and we start trading above it once again, I don't have any technical justification to tell you that, yeah, I would feel nice buying it, right? Because I don't. That I didn't cover. Oh, I think we got more or less everything covered. And, the rest of it, we're going to go through them in the chat room. Coach, is your guest here?
Yes, Steve.
Perfect. So we'll see you again tomorrow. Stelios is going to be here. I'm going to be here. I'm going to see perhaps Andreu is going to be here to give us, his perspective on harmonics as well. If he's not, we're going to talk about some macro and political stuff at the beginning and then go through charts once again. So enjoy the interview, Coach.
Okay,
See
good
you
hunting. Good hunting today, Steve, Stel.
Thanks,
See you
mate.
guys later in the chat
Thanks,
room.
Coach.
What you guys have to join, subscribe.
Coach, before you start your interview, because I completely forgot about it, please mention our
Forest
good
Park.
partners, Forest
Yeah,
Park FX.
Yeah, guys,
because
there's no law against having more than one account. In fact, sometimes you need to have comparisons to know where you're getting the best service or spreads or everything. And our sponsor, Forest Park FX, a couple of great guys you could get in touch with.
I passed to the screen.
Justin. And I would make a call. They've also helped people if they've had some conflicts with brokers. So be good to put them in your network, call and say hello, thank them for sponsoring FACE. And now we're going to talk to Forex Cobain. It's my first interview with Forex Cobain. I've seen you on Twitter for a long time. My trading warrior brother, great to have you with us in FACE today.
Hey, Dale.
Hey, nice to meet you. How are you today?
Doing well. How you doing, Dale?
Doing good. So why don't we start here? Why the handle Forex Cobain?
That's actually a bit of a bite off of another Twitter guy, but
Okay.
you know, everybody's got their favorite celebrity on Twitter, and ever since I was a kid, Kurt Cobain's always been
okay.
a favorite celebrity. So I happen to like the white glasses, and then slapping the you know, the currency logos in there. I think that it fits well.
You know, a lot of people were excited to hear you being interviewed. You may have to do it more often. So why don't you tell us a little bit how you got started, who influenced you, maybe what you were doing before you became part of the trading mafia family?
Well, you know, first of all, I still just do it in my part time.
Okay.
I'm just a retail guy. You know, I'm still learning.
Okay. We all are.
I got into Bitcoin probably around 2014 or so.
Nice.
And started trading that first. And I had the unfortunate, you know, circumstance of having beginner's luck in that. So I thought I knew what I was doing, because in the beginning I was actually doing fairly well. And it kept me going into the point where, you know, it obviously started really not doing well. And then from there, I really wanted to understand why I wasn't doing well and what it takes to be good in this game. So that turned me to technical analysis and just wanting to learn more about it.
Who influenced you?
Guys. There's actually a variety of folks on Twitter who first influenced me.
Okay.
And the original influence, of course, was just, you know, how can I make some more money on this thing? But there was guys on Twitter that I saw that were presenting, you know, these interesting ideas, and they were posting charts, and I wanted to know more about it. So I got a TradingView account and started playing around and messing around with indicators and having things, you know, send me one direction and then another indicator send me another direction, and started to learn the value and kind of dialing it down and just simplifying a process, which I'm still working on. You know, we're all still working on our process. Okay,
so why don't you kind of tell us what your setups mean here and what's important for you to monitor, looking at the Euro USD, what the 300-minute chart that you're using right there? What's the 300 on there?
Yeah, so that's a 300. I don't even know if it makes sense, but
I prefer like a 5-hour chart.
Yeah,
okay.
Exactly. So this is a 5-hour chart.
Okay.
So, you know, everybody's charting in these standard time frames,
right?
1 hour, 4 hour, 12 hour.
Right.
So whether it makes sense or not, what I like to do is I like to chart outside of those time frames, and I feel that if you're doing something like on a 4 hour, each of those candles are compiling just a little bit more data than like a 4 hour, and it changes the structure of the wave ultimately.
All right, so obviously you're a nonconformist. So so you want it to be unconventional with your time frame, because, you know, I don't think I've interviewed many people that use 5-hour charts. So what else is up there that is kind of from your own trading creativity? Like I see you have different rectangles. Are those just pivots, supply demand zones that you have up there?
Pretty close to it, but really, instead of pivots, what I like to go for is I like to take a zoom way out and look at something like even the daily or the weekly or the 2-week chart, for the monthly, and I like to identify zones where something pretty significant happened. You know,
Okay.
I don't feel that every price level really means something, but if you zoom out, you can see the meaningful price levels. And when I say meaningful, you know, I'm talking about, like, I guess banks, or, you know, you hear the term
Right.
MM, like market maker.
Right.
So they've got their levels, and, you know, sure enough, if you give it time and you let price come back to their levels, it'll probably do something significant again.
Interesting.
So
How long of a do you have to go out to, say, a weekly chart for those to become obvious to you, or you said you have to look longer term to find the good levels? What time frame do you look at?
yeah, so these rectangles are probably drawn on something like the daily or even the 2-day.
Okay.
So I'll mark lines with, like, I got this solid green line here,
Mm-hmm.
and I'll mark a solid line off of a higher time frame, and I'll put a box next to it. A box is, or a rectangle, it's a little bit hard to gauge because some of them are going to be, you know, 25 pips wide. Some of them are going to be 30 pips wide. Some of them might be 35 pips wide, but I generally keep them in that range.
Okay.
And you can see here, like in the little yellow annotation that I've got, you can see that, from my experience at least, if you wait for price to start doing some action around the box, and especially something like a significant line, like a solid line, which means, you know, like I said, it's drawn off of a much higher time frame. If you catch something a little bit outside of those zones, that's where I found is the best risk to reward. I think a big part of this game is identifying where these safe or really good risk to reward zones are. Everybody's got their own method of doing it, but this is just mine.
Okay, so
And,
interesting. You talk about action outside of the significant zone. So, you know, it's still my belief. It used to happen in open outcry. Now it happens just through algos or black boxes. So you kind of look for a stop hunt where people might normally have their stop at the top of the box. Sometimes it probes it for liquidity and then reverses. So you're kind of looking for stop hunts, aren't you?
Absolutely, just like your handle.
Yeah. Okay.
I'm looking for those stop hunts. That's something that I discovered in the game of futures and Forex, is they're really just trying to hunt stops. They're trying to take stops out. And once you kind of start to wrap your head around that, it doesn't necessarily give you an edge all in itself, but it gives you a little bit of direction, because then you start to look for those zones.
Okay. All right. So let's see. So is this a fairly up-to-date chart in the euro? So maybe you could tell us what you'd be looking for from here based upon this. This is kind of a ranging market. Do you prefer trading in a range-bound market or a trending market?
I probably do most of I don't necessarily have a preference, but I probably do most of my trading in a ranging market, just because I find it easier to catch these little zones. I have what I call like an impulse move, and it's generally the first significant candle on something that looks like it could be a good reversal.
Okay.
So I've got this one marked in red here. And by the way, this chart is just from just before the market opened on Sunday.
Okay.
I'll switch to trading view, and we'll try to identify.
All right. How do you know the difference just from one candle, whether it's an impulsive or corrective candle? Is there any way to know?
You don't really know until another candle or two is printed. So
Okay.
if I see something like this move here, there was already some significant action moving up, and then it started to print what looks like it's going to reverse, and then another good candle that kind of confirms that it's reversing. So then I'm going to assume that this was really like the impulse candle, and
Okay.
I like to pick a zone that's, you know, right behind it.
Right.
And then I'll wait. I'll wait for it to do its whole bit. I didn't necessarily take any action here, in this whole blue box because I already saw that it was poking, bouncing in and out of it, and I've had this blue box here forever. So I waited till it actually retraced almost, you know, whatever, almost 90% of the way back to pretty close to this high. And really the only thing that I played on this one was just a few candles down into here. And once it came back into the box, I already had an idea that the box is probably gonna get it to reverse. So I mean, I could have played it down here, but the point was I thought this was the safest move.
Okay.
And this was the safest move for entry, and then this was the safest move for exit.
All right, something I've noticed, maybe you have, I just noticed it here, just looking at it. Your first example, the reversal happened on a red candle right away and followed through. The purple peak that you have, the correction from the high had another blue candle before a red candle came in. The high of the move up there, you had a red candle and it was directional. So have you noticed that maybe the better moves start when candles switch colors right away instead of hesitating from a peak or a trough?
Yeah, I would say so.
Okay, because if you haven't, it's something I noticed today.
Yeah, good observation there, Dale.
Okay.
There's a whole world of you know, charting just off of these types of candles. I don't even know if I'm saying it right. The Heikenasi.
Okay, yeah, I have a hard time with that too.
I don't necessarily go off of that, but I definitely pay attention to it at least a little bit because it gives you an idea. So I also look for what the wick looks like, you know, before it reverses, and then it's like you said, you know, then I'm looking for the change in color of the candle to really confirm that reversal.
How many years have you been at it?
I've really only been doing technical analysis since 2015.
Okay. So you're in your third year.
Yeah, I'm only in my third year.
Well, you should be hopeful now because, you know, a lot of the guys that have made it in the business, the average answer before they have breakthroughs and they can learn to become consistent is about 4 years. So, you know, you can't learn experience. You have to put in the time, don't you, Cobain? And in this, it's screen time.
I agree 100%. That's definitely something that I learn and reaffirm every day.
Okay.
I can tell I've still got a long ways to go, and I understand that. And subsequently,
who's your favorite follow on Twitter?
There's a bunch of good guys on Twitter. I mean, there's funny guys that my favorite. You know, I think probably one of the most valuable guys and one of my personal favorites, just as a guy to talk to on Twitter, is there's a guy, Hotshot. I spend a lot of time talking to him in DM. Well, shout out to him.
Okay.
There's also Miyad Khosravi.
Oh, yeah. I know Miyad. Yes, I know. The first one was what? Hotshot.
Hotshot. He's a good guy. We share a lot of charts in DM.
Okay.
So I've always got an appreciation for someone who's a chartist. There's plenty of good chartists on Twitter.
Okay.
But just all the guys and girls that share valuable information on there, you know, for free. It's a pleasure, and we should all be appreciative of that. So
I want to ask you this, because there are a lot of people in your position that are still working and learning how to trade and trading. What session do you mainly trade with the kind of schedule you have?
Well, I'm on the West Coast, so I spend a good portion of my time trading the Asian session because it's when I get off of work.
Okay.
I've also noticed that there's maybe because I don't have experience in markets going back, you know, a decade plus, but from my experience, what I've seen is that there's actually a lot of good moves in Asian session, and you don't need it all depends on what your trading style is and, you know, what kind of leverage you're using, what kind of time frame you actually trade in.
Okay, so you're not the first person that said that there are decent scalping opportunities in Asia. I would just add to that very few turning points happen in Asia, but there are interesting trades, especially more lately. A lot of stuff's been happening over there since the tariff talk became a reality.
Yeah, that's true. I've definitely been noticing that. In the 3 years I've been spending time on charts, I have noticed that as of lately, like you said, with the tariff talk, that it's we're actually getting bigger, better moves in Asian session. Definitely the best moves happen for me in Forex from what I've seen in the London session, but yeah, I'm usually knocked out. I'm usually knocked out at that time, so I don't catch all that.
Yeah, I'm on the West Coast too. I'm up at 3:30 a.m. every day. So Jake,
there you go.
Our life is like a farmer, up before sunrise, asleep after sundown, except that we nurture seeds of greed for the harvest of pips.
There you go. I like that.
Yeah, you can use it. So what's your goal? Is your goal to be able to leave your job and just full-time trade and be mobile? You want to manage money? You want to be a mentor to people? Do you have any goals or visions for your trading career? That I talked to a guy yesterday. He said he'd like to be hired by a hedge fund or sell its platform to one. What's your goal and your vision for your trading career?
For me personally, I would like to get to a point to where I can rely on it, for a good source of income. I read various books, and there was one thing that kind of stood out to me a few years ago. It was I think it was a book written by Charles Bukowski, and he said, once you get to the point to where you're making profits consistently for 2 years, then you can consider leaving your job.
Okay.
So I'm using that as a personal goal, and I'm not shy to say that I'm not there yet, but it's like I said, we're all still learning. I'm definitely still learning. So once I get to that point, then yeah, who knows? Maybe I'll start sending you guys pictures from the beach. With a Corona and a laptop and everything,
Living large, Forex Cobain.
There you go.
All right, so was there anything else you wanted to share with us today, or are you interested in having people follow you on Twitter? You tell me where you want to take it from here, buddy.
Yeah, I'll share a little bit more on the chart side, and then I'll pop in the trading view for just a little bit.
Okay.
So this is a multi-pane window, and it helps keep me it helps keep my focus on what's also going on a higher time frame. So I don't typically look at a time frame much higher than a 13-hour. That's the 780 minute here.
Okay.
And as I already showed you, I do actually spend a lot of time charting in the 5-hour. So that's this one in the middle. And then where I'll kind of try to pinpoint or execute trades really is in the 78 minute.
Did you choose that because it's a FID number like 78.6?
Yep. As a matter of fact, I did. So that's a good observation. You're
very creative. Good. You're very, very, very creative. Okay, so yeah, and you're also, so there's another for someone using the 78.6 as a time frame. So the 78.6 is kind of like your trigger chart, right? And the other two kind of give you biases.
Exactly.
Okay. So what are you seeing here in the euro?
Well, this was pre-market open. So really, what I was expecting was for us to probe this box again, and I've already identified this level, this 1.175. Yep.
Did we do that?
I'm going to go to the trading view chart, and we're going to find out. And also, it would be taking out these highs too. So that would also be a pretty significant or a good reason to pull a reversal.
Okay. So maybe a stop hunt over 17.5 would be kind of what you're looking for.
Yeah,
right.
Exactly. So it's not always guaranteed. Sometimes we'll pull back, real close. So if we have a look here, this is the chart moving. So
I sure hope you have a different ending to your story than Kurt Cobain did.
Yeah, well, as long as I keep doing well trading, then I don't think I'm going to be pulling out any shotguns. So,
all right.
So,
is that how he did? It wasn't an overdose. He used a weapon.
He used a shotgun. It was actually kind of interesting. I mean, he put a shotgun in his mouth and he pulled the trigger with his toes. I don't think many people can do that.
Wow. So yoga helped him commit suicide. There's a health benefit to yoga. All right, so I love Jesse Livermore, but I want a different ending than Jesse too. So, trading is only what we do; it's not who we are. So let me quote you on that, okay, buddy? And you want to get to a level so that each trade is not life or death. And that you're not celebrating too much when things work out, and you're not feeling too discouraged on losing trades so that you get into a fetal position. What you want to get to is it's just another trade.
Certainly. Yeah,
okay.
100%. It's also a psychological game. You'll learn a lot of things about yourself through trading. And definitely to anybody who's listening, if you get yourself in a bind and you're in a fetal position, I mean, reach out to some other traders, talk to them. Just know that you're not alone. We've all been there. I've blown accounts. I've been margin called. It's one of the shittiest feelings ever. So it happens. You know, it happens.
Yeah.
So here's actually the current chart. Here's Euro working for us right now, and check that out, Dale. It actually reversed right exactly at that level.
Yeah, nice line, man. Beautiful. So I'm rooting for you.
Well, thank you very much. I'm rooting for all of us.
Okay. Well,
I know there's got to be somebody on the other side of my trade, but I'm even rooting for them sometimes. You know.
Oh yeah, you depending upon your time frame, you could be long and short and be right on both of them.
Yeah.
Or wrong on both of them. So
exactly.
What a business, huh? So I want to say thank you for being with us today. I hope you enjoyed it. Is this your first interview?
Yeah, this is my first interview.
You did great. So, you made another breakthrough. You made a public presentation to, a few hundred people or more, and sharing your journey is really planting good seeds, because we all learn from each other, and there's many people trying to do exactly what you're doing. So keep it up, and have the fighting spirit, and one day I think you're going to be having that corona. I believe in you, buddy. So thank you for being my trading warrior brother and coming into face today.
Absolutely. Well, thanks for having me, Dale. Appreciate it. Appreciate what you do too.
Thank you. Thank you very much. Okay, everyone, that's Turnaround Tuesday. If you want to follow Forex Cobain, it's at Forex Cobain. Is there an underscore on that, Jake?
There's not. Just all run together.
Okay, at Forex Cobain. Follow him. Follow him on his journey. There it is. He's showing it for us. So enjoy the rest of your day, everyone. Good hunting, and see you tomorrow. And don't just count your pips, count your blessings. Adios, everyone. Thanks again, Cobain.
You got it. See you, Dale.
All right. Bye-bye.